Hi, folks. Good afternoon, and welcome to the open banking the session this afternoon. So today I have the privilege. I have many privileges, in fact. To start with, I have the honor of hosting three women entrepreneurs, and also this actually if fintech is the cutting edge banking, then open banking is a cutting edge fintech. So we also have another honor of making it, the truly cutting edge in spirit by having one of our the panelists joining remotely. So Mr. Sabyasachi, I think is I think we'll do the intro quickly. Just to start with, my name is Krupesh Bhat. I'm a founder at SignDesk. We are a document automation, the solution provider with the stamping, signing, and contract lifecycle management. So I think we are running short on time. We'll keep it the crisp, and then we'll keep it short. So we will start with the introduction. So we'll start with Deena.
Hi everyone, good evening. This is Deena Jacob here, co-founder and CFO at Open Financial Technologies. We are a SME-focused neobanking solution, a neobanking platform and based out of Bangalore.
Hi everyone, I'm Aishwarya Jaishankar, co-founder and COO of Hyperface. We are a credit cards as a service platform. We help banks and co-brands launch credit card programs faster and better.
Hi everyone, this is Nilesh Sangoi, CIO of Fincare Small Finance Bank, one of the new age banks.
Hi everyone, I'm Hena Mehta. I'm co-founder and CEO at Basis. We're building a women-focused financial services platform. We recently launched our card on the Hyperface infra, so we're a happy customer and are looking to do all kinds of financial services, all hyper-focused on urban Indian women for now.
Yeah, hello everyone. I'm Sabyasachi. Firstly, I really regret not being there in person. I just logged in some time back, and from whatever I could see on the stage and off the stage, I think there's a certain amount of energy that's visible. I would have loved to be part of that. Plus, I think I have a certain connection with Bangalore, having spent two of my formative post-graduation years there. So generally, whenever I get a chance, I make it a point to be there. Today, unfortunately, I couldn't. I am part of the BharatPe group. BharatPe recently acquired NBFC called Trillion Loans. I'm a whole-time director and business head at Trillion Loans. Thank you.
Thanks for the introduction. So open banking, we'll open banking discussion with the Bank Open, the CFO and co-founder of Bank Open, Deena. I'll start with the first question to Deena. So I think we were discussing, and then we were talking about the challenges and the difficulties and the journey when you start and then launch a neo-banking platform in a country like India. Obviously, went through multiple challenges. I think you've been there and done that, and now I think this is recognized as one of the platforms, and then I think you also build the reputation for being one of the pioneers in this space. But how does the future look? Now, I think thanks to the economic changes and the global, the meltdown recently, that most of us have started beginning to realize that the sustainability, the profitability, and the values, all these things matter, right? So in the light of this, how do you see neobanks evolving and then the maintaining their competitive edge going forward?
Thank you. That's a great question. In fact, there is a lot of questions around the survival of the new age models, neobanks. The first thing to understand is to get our minds clear about what is open banking, neobanking. So when we look into the future, what's going to happen is that traditionally we have seen banking taking care of the entire channel, taking care of money flow, the trustees of money. There's a lot of trust factor around it and has been traditionally or offline. But in the last 5 years, if you look at it, even in India, when you look at it, from 2015 onwards, it started with payments slightly earlier than that, and then started with the lending from a completely digital perspective. And today, if you see, the entire banking is moving towards the digital part of it. thanks to demonetization, thanks to the GST which is coming, thanks to various other things, I mean, internet penetration, a lot of these factors has led to this. And now, talking about neobanking, it's nothing but it's a new way of doing banking. And the new way of doing banking is going to be digital. Let's make peace with that. And that's where, what is the proposition we are giving to the customer is the true thing which is going to define whether people are going to, are you actually solving a problem? Are you actually giving a solid proposition to the customer? Based on that is what the customer is going to pay you. Enhanced user experience, a UI UX is not what open banking or a neobanking should stand for. How digitally cohesive, a very good journey you can provide to the customer, experience you can provide to the customer. When it goes back to some time back, we were hearing about the lending, as simple as that. How do one consume dynamic data? How do one get data from multiple aspects? How can technology take care of that from the customer's, consumer's perspective? What are their demands? What are their requirements? So this is where the future of banking is going to be. Bank is not going to be completely separate entity with one branch name standing there, but it will be embedded into your workflows, your transactions, and where the requirement is of the money flow happening. And that's going to be the future. If you're playing there are a whole lot of solutions which we can build around and to solution for the customers. And that's where I believe that's the way to go. A digital bank is a way to go.
I think it's on the asset side of the journey, right? I want to ask this question to Aishwarya because she runs a company where they empower the people with the new age credit cards, another kind of open banking and then financial services. So on the asset side of the story, is it any different? How do you see it? And then what has been your experience post-COVID?
I should start thanking Deena on contextualizing embedded finance so well. Because we have today come to a point where we can talk about contextualizing and the bank going to the customer rather than the customer going to the branch. But trust me, there was a time that banks were designed with locked up branches. The systems that were designed for the banks didn't even have APIs. I've been part of digital initiatives across banks. We have had to wrangle out API after APIs from partner to build the bank's own front end. Leave alone partners. Today, see where it has evolved. Every bank has got partners worth their salt. The larger banks are going with players like Open. Even the largest of banks today are talking about fintech partnerships. We ourselves have signed up with a clutch full of banks. Opening up banking in its truest sense to me is what Hyperface powers on the credit card side. Co-branded credit cards have been there for years. People have used their petrol cards to shopper stop cards to whatnot to get loyalty programs. But bringing the level of customer experience that is in a bank app or even better, because credit cards are always known for rewards and benefits, the challenge has always been, where do I go claim them? Every one of us have got 4 credit cards, but I'm sure it's still a mystery to figure out where the reward points come and go, where do I go for the lounge access. At Hyperface, we are trying to bring a single window programmatic management for banks to offer these multiple benefits and for a co-brand to be able to embed it. Imagine in your co-brand app, if you're told that this is the cashback that you've earned, you're able to see the breakup. You're able to immediately transfer it into a checkout within the co-brand. Or even better, you could redeem it back into the bank's reward program or bank benefits like a lounge access. So to us, as Deena said, going to the customer really matters. And for banks to grow, it will, COVID was great. It brought in digitization. I would call it the first wave. Today, every bank knows BharatPe dhanda nahi chalne wala hai. I think the next wave is coming and the next wave is here. Every bank, big or small, is partnering, and embedded finance is going to play a big role. And on lending side, I'm very bullish on credit cards because of the transactional nature of the credit. Typically, customer gets a credit line one time. But in a transactional credit, this underwriting cost comes down significantly. But far often than not, the glamorous lifestyle part of the credit cards get focused. But if you look at a product like UPI on credit card, if you could give it to a customer at a 10,000 ticket size, imagine how many lifestyles at a lower end you could impact. A farmer could go buy a seed to the procurement products and not just get a loan and its interest keeps growing. So I think transactional credit is at its cusp in the country. We are barely at 1 crore credit cards, and at Hyperface we are trying to build a technology stack that will help banks scale easily on that.
I think the credit card as a credit instrument was kind of, the written off for a long time in India, right? So many of us thought that the invention of UPI and the fintech and then open banking probably is going to kill the credit card business. But that hasn't happened. So now, this question is for Hena. So she is the one, actually, she is empowering women with financial services, and also she is empowering them with credit card as well. So, how is this, the story has changed? We thought that credit cards are going to go away, but then now actually we are talking about credit cards and then the financial services, and then, the fintech stack built on top of credit cards in the credit system. So what has been your experience, and then how do you see things are evolving, and then how did you use technology to solve this problem? And also I think you operated a different segment where it's not being marketed as a credit card for everyone, but then you're addressing a problem for a very the niche segment, also something that was much needed for the country.
Sure. Thanks, Krupesh, for the question. So just to clarify, we're not doing a credit card. It's actually a prepaid card, which has worked out really well. And to your point on, could UPI kill these sort of payment instruments? We've seen quite the opposite, right? I think customers are looking for experiences that actually work for them, right? Why would someone use the basis power card over name 10 other ways or 5 other ways she has to pay? It's because the context, the personalization, the curation of the experience works for her. So with the power card, we've built out our own reward stack. We've partnered with brands and products that women actually spend on and care about, and have sort of personalized the experience that way. So that's what we've seen, right? I think customers are looking for that relevance in what they use. It's not just about making the payment, but also, the experience around it. And then we've added bits of community and financial education to the experience. So as a card member, as a power card member, you get access, it's a membership, right? You get access to community events. We will continue to be your partner in terms of educating and keeping you informed on your personal finance. So I think that's where these curated, customized experiences really come about. Of course, the only way to really do it at scale is through tech, right? I think credit cards have existed for decades, cards as a form factor, of course. So of course, digitization has helped scale, has helped with access. And I know our topic today is around open banking. I think open banking and open APIs have allowed us to make it personal, right? Have allowed us to tap into data that we wouldn't have access to otherwise, have allowed us to create experiences that actually work for customers because of how open data has played out. Of course, we have to maintain privacy, security, and all those things. We're all building financial services businesses, so that is in our DNA. It's the name of the game. But if we're able to balance the two, I think it could create exceptional customer experience, which is what our end customer is always craving for.
Thank you. So I think one of the things that are common themes, right? The fintechs will have to face many challenges, and one of them is, whether you the fight or partner with the establishment. Could be a regulator, or could be, the banking system, or could be, the financial system. So I want to ask Sabyasachi, who's the director at Trillion, the loans, and then now it's part of BharatPe. So how did you face this challenge, and then why do you think the banks need to open up, and then what is the way for fintechs to open up this conversation, and then like opening up the banks APIs or the system, or even actually to get them think about some of these aspects is not easy, right? And how did you overcome these challenges, and then how do you see this mutually benefiting, and then more importantly, how would it help the country overall in opening up the complete ecosystem, so that the unbanked and then the people from tier 2 and 3 towns will benefit from this innovation by bringing the the traditional banking, by bridging the gap between the traditional banking and the new age fintechs.
All right, thanks. So I think without doubt, collaboration is the way to go. And yeah, and over the last few years, you have seen collaboration between banks and fintech, right? So obviously there is a section, there is a certain perception where people view it as a competition or a certain kind of friction between the banking side of the world, which is more regulated, and versus fintechs, which are more new age. But I think if you see over the last few years, right, both by design, and then say design is by the set of regulations, guidelines coming about, plus also by choice, where people are, both from the fintech and banking side, more open to collaboration. I think both by design and by choice, you are seeing more and more collaboration between banks, NBFCs, other financial institutions, and fintechs. I think both have a certain set of strengths to bring to the table, which will help in, you mentioned the point about financial inclusion, or rather I would say financial empowerment, right? So banks have been there for decades. They stand for a certain level of trust. They have a strong brand name. They have a strong recall. They're governed by a certain set of compliances and regulations, right? And broadly perform within a defined set of framework or rules, right? Now, fintechs, on the other hand, when they came about, right, they came with a certain set of, understanding about, so I won't say user experience, right? And one of the panelists earlier mentioned, user experience is just one part of it. I would rather say the whole thinking about product, right? How do you view a product and re-engineer, restructure a product end to end? I think that's the kind of thinking, both from concept to implementation, that fintechs have brought about, right? So a product, user experience, adoption of new technologies, how do you leverage data, the massive amount of data that's available, that's always been available, but obviously with the increase in computing power and the increase in access of this data through smartphones, your ability to leverage that data has just sort of gone up, right? They bring about some of these trends. And if you just see what I've outlined, a lot of this is by design complementary, right? Fintechs working with banks, it essentially enables better access, better distribution of products. And when I say better access distribution, it's, there was this old school BCs also. Banks used to rely on BCs to get access or distribution to, let's say, a certain segment of society, or let's say MSMEs, or getting into tier 3 cities and so on, right? So fintechs are not just solving the distribution access problem, but they're also getting a lot more product, a lot more segment of people under the right kind of products, right? And then personalizing those products to meet their requirements, right? So closer home, I'll take an example. For example, when BharatPe started, we started with a QR-based payment product, right? And one of the USPs then was, and this is like 2018, was we came up with the first interoperable QR, where irrespective of which consumer app you're holding, you could use any consumer app to make a payment on any QR. So it was more of and now everyone has interoperable QRs. Now, we worked with banks, obviously, on the UPI stack, right? That had to be the UPI rails with organizations like NPCI, with banks on the core banking stack. We had to work with them to ensure that this is scalable. It is able to, there is the ability to support a certain TPS and a certain volume. And then that collaboration has only expanded over time. For example, because we had access to a lot of the data around the QR-based transactions, what we call as TPV, we could use this data to do a better kind of facilitate a better risk assessment of the merchants, right? Our core segment is essentially the small merchants, the kirana stores, the neighborhood stores, who typically were less banked. I wouldn't say unbanked. A lot of them had accounts, but they didn't have access to, let's say, formal credit, or they didn't have easy access to other products beyond, let's say, a plain savings account, right? But because they are now part of a payment platform or payment ecosystem, where there is a lot of data that could facilitate sort of credit risk assessment, or other kinds of assessment about the merchant, we could work with banks and other NBFCs to start lending to them, to offer add-on products to them like cards and so on, right? So essentially, I think by one means or other, whether it is imposed through guidelines, rules, or whether it is through choice, whether it's market determined, let's put it that way, I think we are seeing increasing amount of collaboration between banks and fintechs, and I think that is the trend going forward as well.
Thanks. So I have the two-part question to Nilesh. I feel that presumably I feel that you are at a great disadvantage being the small finance bank, because you have the privileges of everything that the traditional established bank has in terms of the regulatory and then the access to distribution, all of it. But then at the same time, you can actually move quickly, right? So probably this question I think suits you better in terms of the tech adoption in banks, right? So what is really happening? I mean, the pace of tech adoption, obviously, it has gone up over time, but then in a banks like yours, how different it is. And then I can't really, complete this conversation, this panel discussion without bringing Gen AI and then Chat GPT. So the second part of the question is that do you see any disruption happening with the new age technologies such as the AI, the Gen AI, and then the blockchain, and then IoTs, right? So how do you see this space evolving?
Sure. So I'll speak about our bank, because the banks could be in absolutely wide spectrum. There could be banks which are run very traditionally, and there are banks which so, I mean, we were speaking about fintech and the great capabilities, like we spoke about user experience, we spoke about, end-to-end digital product re-engineering. And so when Fincare got established 5 years back, we made it a point that, by DNA, we will be a fintech. And though we have a banking license, we'll try to build our in-house capabilities around a lot of stuff on tech, on product, on design, and that's the direction we have always followed. We built a 200-member team of engineering products, and we built a lot of capabilities around some vendor products like core banking, etc. That how do we build a large set of APIs so that the core banking as such doesn't become a bottleneck for us to innovate. And we can always, without touching core, we can build systems around that. So that has been the journey, and continues in a very agile way. We moved to cloud. We run, multiple CI/CD pipelines, and do a lot of agile rollouts. So that's about the banking journey. And yes, AI or machine learning as such is obviously goes without saying. Any business today needs that and banks obviously has a huge amount of data. We have 5 million plus customers and history of many years of data. So we use it around underwriting, we use around customer service. We built up a bot. This was before generative AI. We had built it on NLP, bot on WhatsApp. 100 plus use cases can be solved in a conversational multilingual mechanism, and now we are working on building that to Chat GPT kind of a solution with a more expanded solution around that. And then we worked around fraud preventions, fraud detections, anti-money laundering, and many such use cases around risk profiling of customers, about cross-sell, upsells various products to the customers through machine learning models. So there are constantly new solutions evolving.
Thanks, Nilesh. We'll also take a couple of questions. Being this being an open banking discussion, we'll also open the floor for questions. Maybe I think we can take a couple of questions, but before that, do any of other panelists, want to talk about the disruption that is happening, right, from the technology perspective, and then what is happening with the Gen AI, and then what is happening with the newer, the generation of technologies, right? Some of the devices and the technologies that probably that will be being introduced for the first time.
I'd just like to add to what Nilesh was saying. So I don't, again, see it as disruption. I think it's more augmenting and making existing processes and all of that more efficient, right? So with AI, of course, Nilesh talked about a bunch of use cases, whether it's around fraud detection and prevention, better customer service. We actually built out a personal finance assistant on Basis. It's a GPT-3 model-based bot who has learned from tens of thousands of data points in our community. So we've been running our community on the app for about 3 years now, and so she's trained. Her name is Minty. She's trained on these data points and actually gives great answers. It's information, of course, it's not advice, to very contextual questions around money, right? So I think we'll see a lot more of these AI assistants coming up, and then it all boils down to great customer experience, better risk management, whether it's around underwriting for loans, for insurance, claim settlement is another one where there's just so much data, it takes so long. So I think we'll see, I don't see it as disruption. I think it's just making things better from the way it was done in the past.
I would just like to add there, I mean, being an ex-banker, I can't not think of the kind of use cases that AI would bring into back office, right? I mean, for long, one advantage that banks have is the reams of structured data they've been sitting on, thanks to the regulator. I mean, something as simple as you resetting your PIN, last 7 years of your logs have to sit somewhere in the bank system. So the amount of data that's already sitting, because when building AI models, that's the biggest challenge. I'm sure Hena had to feed a lot for Minty to reach to the point where it is. I would like to think banks are actually at an advantage when it comes to structured data. And when it comes to big pockets to invest, we all know where they are. So I think it's a very exciting, a space to watch out for, because I'm sure as we speak, banks are thinking about it. And I'm not so much towards generative AI, but predictive AI already has been used, and we will see more and more of it. I don't think banks would need 100,000 employees. That could be the reality that spins out very soon, is my guess when it comes to AI. Second is exactly what Hena said. Fintechs will be 1 to 5 steps ahead in bringing out the powers of AI. Obviously, we'll have banks following suit. So there's going to be very interesting times, I think, from a back-end as well as a customer experience perspective on AI use cases.
Just to add, I mean, can't agree with everyone more. When we look at, even for that matter, be it open banking, be it, the goal we are trying to reach in a country like India in terms of the inclusion, the development on the economic side, I mean, more stress can't be given to how important the new technologies are supposed to play a role, how important a role they are supposed to play. Coming back to why digitization is important, a country like India, offline models cannot service everyone. And that's what we have been seeing in the past as well in terms of the banking penetration, how many people have access to banking. That's when we started about inclusion, everything. And today, for example, when we picked SME as a model, initially we were also apprehensive how many would understand, how many would have access. Interestingly, surprisingly, as we said, probably in the last 3 to 3.5 years where we started scaling up, we have about 35 lakh SMEs covering almost 80% of the PIN codes of India. Unthinkable. And going forward, in the sense 80% of the PIN code people are accessing. And this is where technology has to play a role, because this has to be, that is where, whether it is generative AI or whether it is a kind of, the machine learning, for example, the models which has to power, this is where, whether it is just the user experience, it is not. What they experience has to be deep within what the product is giving it to them, which is where, how their data is being analyzed, how the need even is being analyzed, because that's something even a consumer doesn't know, where they really need, when they need money, which is where, predictive AI could come into picture, or when they would actually have a shortage of money or a surplus, how it needs to be done. And this is where, the interaction happens. That's where generative AI also comes into picture, wherein, interactions, how easy the interactions can be and how easy the pull out and in terms of user experience can be. So this is where each of these models are going to tie in and then ensure the efficiencies in terms of the cost of, operational cost, which has been the hindrance for banks to go out and capture offline in multiple places. That's going to come down, and that's exactly where traditional, while banks from a trust perspective, from the traditional perspective, money flow perspective, they hold the entire part of the money which is required as a trustee. There are these partners who are into, various partners, right from infrastructure to enablers to technology, which is a collaboration which is coming in today and effectively going to the to the end customers. And this is how the real open banking and the nation building and inclusion is going to happen. And that's where technology is going to play a great role, all the newest technologies for that matter.
I think the India has provided technologies, like UPI and then Aadhaar and India Stack, and hopefully we could do something similar in the space of AI as well, which is going to be the future for the next 4 to 5 years. I think it's going to keep all of us busy, that's for sure. So we have another 5-6 minutes, and then I have a lot of questions, but I thought I'll give this opportunities to the audience. So we will take a few questions. Okay. Can someone pass the...
I think it's a great session, and thanks for your inputs. Just another point to make there, that I think the open banking and the work that I think has been done in India, this is something that a lot of other economies in the region are looking forward to learning from. And I think it's a great story for and a great opportunity for our fintechs and many of the others to actually take it to the external world. And also on the point that big banks move slowly, you'll be surprising that big banks are also now transforming themselves into big tech. So the amount of work which is actually happening in large firms also, so you'll be surprised with the agility that they are also able to move, because they also realize the threat from fintechs. So interesting times to come in, but I think it's an opportunity for fintechs and others to actually take the great work which has already happened in India to the rest of the world as well. Thank you.
Thank you. I think there's one more question.
Hello, everyone. So my question is around startups and so more and more the banks are becoming like startups, the banks are becoming more like fintechs, and the fintechs are also getting into banking licenses, right? So where do you see this become, like do you see more banks build their own technology, and how do startups sort of anticipate their future in an ecosystem which is so dynamic? Where do you see the evolution happening? Thank you.
I would just, one thing what Nilesh said really connected with me, which is he said we have to work around core banking, right? I mean, we have all tiptoed around core banking, sir, so I completely get what you meant by that statement. I'm just coming to your answer, right? I think therein lies the challenge. We often tend to think when we say bank builds technology, user interfaces building, or journey building, or building middle office, all this is possible. But the core, treasury management, deposit management, CCMS, your laws, your LMS, those are extremely complex machines to be built. And that is where tech needs to be re-engineered today. So when we talk about banks becoming tech, I think of it more as that agility part that he spoke about, to be able to work around limitations. But when I think of myself as a B2B infra who's building this core system for banks, I would like to build a system that can seamlessly merge into the front office or the user interface aspects that the bank wants to build. I'm sure what Open is building also fits into that. So we need better core banking systems. And who are the tech players who are going to come in? So it is not about banks are building tech, so do people die? Fintechs are building user experience, does it mean banks die? We are a country of over 1 billion Indians. Do we all have Just see what Hena talks about or what they are doing in MSME space. There are so many Indias within this India that needs either a fintech or a bank to actively look at and service them. I don't think any of us are going anywhere soon. If anything, B2B infra players, we all also morph into direct to customer, right? Open also has direct to customer product. So in that sense, to me, this either or thinking somewhere, I think it's just in discussions. People have gone beyond and started collaborating, which is a reality. I don't think it's either or at all.
So just to add to what Aishwarya mentioned, from our experience also, we work with 15 banks in India, including public sector banks. And we as a fintech, this is specifically on the SME part of it, on the solutioning. We join hands and we are giving a better solution to the end customer. This is where I mentioned between bank and fintechs increasingly in our last 6 years of existence. In the last 2 years, we have seen it increasingly a collaborative approach. And that's going to continue because ecosystem is also realizing that it is not a battle that only one or a single entity can fight. And that's going to be a battle which is going to be like, it is too huge a problem and too huge a customer base that we have. It's something which each of the parts have to be beautifully collaborated or beautifully crafted by different people. When you talk about technology also, think about the depth of it. That is what the differentiator is. Technology can be just one solution or much deeper, which stitches together into one complete experience for the customer. And that's where the differentiator comes. Which part is being done by whom?
How many startups or fintechs in the audience? Can you raise your hands? Okay. Maybe as one last question I want to ask the Nilesh, right? So what are some of the areas you see for collaboration or building new products or the opportunities to work with banks for fintechs and some of the new age startups, some of the unsolved problems?
So I think banks, the word legacy for banks, it's a very big positive when you look at from a business perspective. So legacy for a bank, because of legacy is what we put our money in the bank, because there is a trust factor. But when it comes to tech, the legacy is what it becomes the stone around your neck. So I think the tech legacy is always something that banks would fight. I think fintechs has a big role to play to modernize that, to work collaboratively with the banks. And there are areas we spoke about: the customer experience, the distribution, the product innovation. All of these are the areas. I think most of the fintechs are very highly focused on lending. I think, and that I'm sure there is a lot of depth in that, but then there are many more things that, I will not give areas because that's the whole challenge for fintechs, to identify those new areas and come up with the new solutions. Thank you.
All right.
Pitch deck anyways to you.
Okay, Aishwarya is going to send a pitch deck to Nilesh. All right, folks, I enjoyed this conversation. Hope you all did too. Thank you. Have a good evening.